Welcome to Smart Investing Psychology, an initiative by Market Research Universe's team, where we help you master the art and science of investing. Today, we're diving into a super important topic for anyone looking to secure their financial future. Why smart investing matters, a beginner's guide. Whether you're just starting out or you've heard about investing and don't know where to begin, this video is for you. All right, let's get right into it. First off, why does smart investing matter at all? After all, you could just keep your money in a savings account and not worry about it, right? Well, here's the thing, inflation. Inflation is the gradual increase in prices over time, which means your money loses purchasing power if it's just sitting in a regular savings account. On the other hand, smart investing allows your money to grow, potentially beating inflation and even giving you financial freedom over time. So what exactly is smart investing? It's not about getting rich overnight or following the latest market trends blindly. Smart investing is about making informed decisions, understanding your risk tolerance, and thinking long-term. Smart investors rely on research, diversify their portfolios, and manage their risks. It's like planting a tree. You water it, care for it, and with time, it grows. You don't uproot it at every sign of bad weather. You stick to your strategy, knowing that over time, your investments will bear fruit. Now let's talk about timing. The earlier you start, the better. Why? Because of the magic of compounding. Compounding is when your investment earns returns and then those returns start earning returns. It's like a snowball effect, small at first, but with time, it grows exponentially. Imagine you invest Rs 10,000 today. Over 10 years, with a modest return of 8%, that money can grow significantly, especially if you keep adding to it. Now picture what happens over 20 or 30 years. The results can be astonishing. When you buy a stock, you're buying a small piece of a company. Stocks can grow in value over time, but they can also fluctuate, which makes them riskier than other investments. Bonds are essentially loans to a government or a company. They're generally safer than stocks, but they offer lower returns. Mutual funds and ETFs are collections of stocks, bonds, or other assets. They spread out risk because you're investing in multiple things at once. Risk tolerance is how comfortable you are with the ups and downs of the market. The higher your risk tolerance, the more aggressive you can be with your investments. Now that we've got the basic terms down, let's move on to the next important question. How do you start smart investing? Here are 5 tips to guide your journey. All right, let's dive into 5 tips for smart investing. Tip number 1, start early. Time is your best friend in investing. The earlier you start, the more time your money has to grow through something called compound interest. Compounding is when your earnings from an investment are reinvested, helping you earn even more over time. It's like a snowball effect. Tip number 2, diversify your investments. Don't put all your eggs in one basket. By spreading your money across different asset types like stocks, bonds, and mutual funds, you reduce the risk of losing everything if one investment doesn't perform well. Tip number 3, know your risk tolerance. If you're someone who panics every time the market drops, you'll want a more conservative investment strategy. But if you're okay with some ups and downs, you can afford to take on more risk for potentially higher rewards. Tip number 4, set long-term goals. Investing isn't a get-rich-quick scheme. It's about building wealth over time. Whether you're saving for retirement, a house, or your kids' education, having clear goals will help you stay focused. Tip number 5, stay consistent. Markets will go up and down, but the key is to stay consistent. One common strategy is rupee cost averaging, where you invest a fixed amount regularly no matter what the market is doing. So there you have it, 5 tips to help you invest smartly and build your financial future. Now that you know how to invest smartly, let's quickly go over a few common mistakes that beginners often make. No one can predict when the market will go up or down. Trying to buy and sell at the perfect time can lead to losses. Stick to your long-term plan. Don't just buy a stock because it's trendy or because you heard about it on social media. Always do your homework. Waiting too long to start investing can cost you in the long run. Even small amounts invested early can grow into significant sums. Many beginners get caught up in the hype, buying stocks based on tips, chasing after hot trends, or panicking during market downturns. These behaviors are driven by emotions, not logic. Smart investing teaches you to stay disciplined. It's about keeping your emotions in check and sticking to your plan, even when the market is volatile. Remember, it's not about timing the market, but about time in the market. Remember, investing doesn't have to be intimidating. With the right mindset and strategy, anyone can start building wealth for the future. So what should you do next? First, take a moment to assess your financial goals. Are you saving for retirement? A home? Once you've set your goals, decide on a strategy that fits your risk tolerance and start investing. You don't need a lot of money to get started. There are plenty of platforms that allow you to invest with just a few rupees. The rewards of smart investing go beyond just making money. It gives you peace of mind, knowing that your financial future is secure. It allows you to take calculated risks, knowing you've done your homework. And most importantly, it helps you achieve your financial goals, whether that's buying a home, funding your children's education, or enjoying a comfortable retirement. By making smart decisions today, you're not just investing in stocks, you're investing in your future. So if you're new to investing, remember, it's not about how much you start with, but how smart you are with your decisions. Start small, stay informed, and let your money work for you over time. That's the essence of smart investing. If you're ready to take your financial knowledge to the next level, check out our stock market trading courses and market research services. Just visit our site at www.marketresearchuniverse.com, where you can explore more resources and even get in touch with our team directly. We're here to help you become a smart, confident investor. All right, that's it for today's video. I hope you found this beginner's guide to smart investing helpful. If you enjoyed this video, make sure to like, share, and subscribe, and hit that notification bell so you never miss out on the latest from Market Research Universe.